Adani Enterprises, Adani Ports, and Ambuja Cements were placed under the additional surveillance measure by the National Stock Exchange on February 2nd. Now, this means trading in Adani shares will require a 100% margin. The move aims to curb speculation and short selling. A quick rewind. This move comes as shares of Adani Group companies continue to plummet in the stock market. The massive market rout comes following accusations of stock manipulation and fraud leveled against the group by New York-based short seller Hindenburg Research. But what is Additional Surveillance Measure? The Additional Surveillance Measure, or ASM, was introduced on March 26, 2018. It was launched with the idea of protecting investors from market volatility and unusual changes in share price. Now, this is what the National Stock Exchange website tells us about Additional Surveillance Measure. The Securities and Exchange Board of India and exchanges decide the criteria for the shortlisting of securities and their placement in ASM. So, what are the criteria? High-low variation, client concentration, close-to-close price variation, market capitalization, volume variation, delivery percentage, and number of unique bands, PE. Now, to put simply, an ASM shortlisting signals to investors that the stocks have seen unusual activity. SEBI has not announced any probes into the Adani share crash so far. So the next question to ask is, how much have Adani stocks fallen? Here are the numbers. According to a report by the AP, Adani company shares are still losing value. Shares in Adani Enterprises fell 27% on February 2nd. 6 other Adani companies fell 5 to 10%. The cumulative rout in a week is now close to $108 billion. It is one of the biggest wipeouts in India's history. On the personal front, Gautam Adani's fortune sank to $72 billion from $120 billion before the Hindenburg Research report came out. What has the RBI said? The Reserve Bank of India on February 2nd saw details from banks about their exposure to Adani Group companies. Credit Suisse stopped accepting bonds of Adani Group companies as collateral for margin loans to its private banking clients on February 1st. Citigroup's wealth unit has also stopped extending margin loans to its clients against securities of Adani Group companies.